All right. Okay, hey everyone. So today, right, we're very fortunate, right, to have my good friend Kelvin, Mr. Kelvestor here, and really fortunate to have him to join me on this investing discussion. So Kelvin is someone that I really admire and respect a lot over the last few years. I know quite a few investors, but he's someone who is not just very good in terms of his investing knowledge, but he's able to articulate really well in terms of his investing framework and his investing strategies. And over the last, 1 year or so, right, one thing that strikes me about Kelvin is that he's very caring and very passionate about his community, like especially during the market jobs and all that. He's always there for his community. And today, I just want to invite him to share a bit more about his journey and perhaps share with us some of the investing tips that can help us more in terms of building our wealth. All right. So welcome, Kelvin.
It remains really a pleasure to be here, and thanks for the kind words. I think you are very kind towards me as well.
Right. So Kelvin, maybe just do a short introduction about yourself, your investing background, your journey, how you got started, and then to where you are today.
Sure. So, growing up, I was really fighting my way through in life. I think trying to be someone that could afford things in life and did not have to worry about money.
Right.
And that kind of led me to study business in poly. And I think for me as a normal academic student, which means in secondary school I do take an extra year, compared to my peers. I
Right.
went to poly and I wanted to do really well to go to university, right?
Right.
I really wanted to be the best, right? When I say the best, meaning not just getting the A's, but really being the top in my class. And for a few semesters I tried, but I couldn't, right? And
Okay.
I felt this sense of anxiety. I felt this sense of competitiveness in me. So
Hmm.
I said, what's something that I'm doing right now that is not enough? And I went on to meet my lecturer, and I asked my lecturer, his name is Mr. Daniel, I'm like, what is something that I could do right now to get better grades? And he said something, Calvin, um, if everyone is playing at the same field, right, and you are trying to compete with them, it's going to be a tough battle.
Right.
But if you're playing at a field that's different from others, then you stand a higher chance at succeeding.
Of course.
See, Kevin, why don't you do something different when everyone is just studying hard for the exams and grades? Why don't you really do something different, which is really investing instead of just studying about investments? And that was really quite enlightening to me. And I said, hey, both my parents and even my grandparents, they are not investors. I don't grow up in a exceptionally educated family, not from my parents' side. So we really had to make life matter for all of us in terms of my siblings, right?
Right.
And so that was my background. I think it was really scary. I started
Hmm.
investing with a lot of fear. And one of the first book I ever read is this book called The One Up on Wall Street.
Right.
And over there, I think I was pretty lucky because it really gave me that conviction that investing is for everyone, not just for people with MBAs. It's really
Right.
for everyone. And I did well enough to go to uni. I did well enough to have a government scholarship, but I gave both of it up. Really a big surprise for a lot of my friends
Right.
out there. And the reason why I gave it up because I was offered an opportunity to work for a fund, and I think back then at the peak of my time in that fund, I was managing close to 30% of the asset under management.
Right.
So looking back, I think I was incredibly grateful, right, for someone at my age to be mentored by this incredible person called Kubun. Taught
Hmm.
me so much, gave me a lot of challenges, trusted me to do a lot of work from Australian companies to Japanese companies. We did a lot of IR calls and we learned a lot. And then I actually left the company, right?
Right.
Because I decided that for the longest time in my life, I've been working really hard. I haven't been really enjoying life, not a single bit at all. I
Oh,
travel a lot. I pick up knowledge.
so there's a lot of stress in your line of work. I mean, back then, yeah.
I, I love the stress. I love the work, but I just didn't felt I was learning beyond what I was doing.
Okay.
I wanted to really travel the world to meet people, to build my connections.
Right.
Connections are extremely valuable. And while I was traveling, I was sharing the pictures on my Facebook. I was sharing what I've learned to many people that I spoke to as well. And people started asking me to teach them about investing. And I said, is this something that I can do? And I said, why don't give it a shot? So I started my company about 2 years ago.
Right.
We started to attract quite a number of high quality customers. And, I think today my time, my attention is fully focused at managing my portfolio, my company's portfolio, and ensuring that the members do get the result. But there's one thing that I really want to say is that I feel extremely lucky to be born in Singapore because really no lack of access to
Right.
information,
Definitely.
no natural disaster. And I think all we need to succeed in Singapore is that to have the courage and determination to win. And of course, in today's era, like how is it possible to be nice to people? It seems to be something really, really difficult. But I realize that in the work that we do, especially as investors, if we are nice to one another, like how you are nice by inviting me to your
Mm.
interview, I think being nice to each other is really important. So I think the best is yet to come as well. And I think investing is something that I devoting a lot of time and attention because this is something that scales my wealth and scales and amplify my efforts a lot. Yeah.
So throughout your journey, I mean, you shared like your journey. You can say it's not exactly you walk off the beaten path a bit. Like instead of doing just have a normal career, you actually give up the chance and then jump on board. To be mentored by very good investors and have in an environment or a platform where you can actually accelerate your learning curve, right? So what makes you, like maybe right now, today, like over the last 7, 8 years or 10 years, you have been like very passionate about investing and you have been learning so much. But right now, at where you are today, I would say you certainly reach a certain level of, competency. What gives you the drive, to further improve yourself from where you are right now?
Yeah. So that's actually a very good question because this is a question I ask myself every day. Like, will my motivation ever
Right.
die
Yes.
out? Will my passion ever die out? Will one day I wake up and say like, hey, investing is something that I don't want to do anymore? As I kind of dig a little bit deeper and try to understand myself, I think understanding ourselves is a very important process for every investor. And
Mhm.
then I asked myself this question. Like I look back when I was pretty young, especially when I was primary school, right?
Right.
Um, I just have this insane amount of curiosity for many things. And I think having curiosity is actually a very important quality for anyone who wants to succeed and have fun in life. So for example, when I was pretty young, I was watching a lot of different channels, right? People might be very excited to watch movies, and I'm very excited to watch about National Geographic. I'm excited to learn about movies, about animals, about the nature. I even bought encyclopedia to actually read
Oh,
by myself, look at biology about stars as well.
right.
So
Right.
to me, I look back at what I was doing in the past and I say, hey, I was really curious about life. And when you're someone that's curious about life, learning just doesn't stop for you, right? And I see that the reason why I'm passionate about investing, or maybe on a broader scope, I will talk about passionate about life, is that it is something that is very fruitful on a 3 point basis, right? A, right? We get smarter because we are curious, we learn more. And B, we become interesting people. Like for example, if I talk to you about Tesla, you can talk to me about Tesla because you actually is interested in Tesla about electric vehicles, right?
Right.
But for someone that just works on a normal job basis and doesn't invest, why would he want to learn about electric cars? There's absolutely no reason. So A, we get smarter. B, we become interesting people. And
Mhm.
I think C is that if you are curious every single day, you learn a little bit, you actually invest a lot better as well. So I think when we look at investing, if we are passionate about investing, I
Right.
think it's just very one dimensional. But on a broader scope, I would like to ask myself every day, how can I remain passionate about my life and
Right.
about this world, and how can I make an impact? So I think by putting my money to where I see the future, that's really a neat idea, and I think that really drives me every single day. It's just about being passionate about life and knowing that life is something I look forward to be
So
experiencing every day.
So I guess like what Charlie Munger said, having have an interest in the world and not just in investing, but have a broader interest in what is going on around the world, like multidisciplinary approach. This way you are able to spot trends and connect everything better together, right?
Absolutely.
Awesome. So perhaps you can share with us also like how is investing for you like right now? Like what is your, perhaps some audience will be curious as a top investor, how is your daily investing routines? Like do you wake up, what kind of blogs do you read or investing stuff do you read? And at your level right now, what are some of the, because I would say you will not know everything because even like Warren Buffett is still learning, but at your level right now, what are some of the challenges or obstacles that you face in terms of like investing? Like, is it like audience might want to know, hey, is it very smooth sailing for Kelvin already? Like, yeah, just chill lah. I mean, like, good to know. But or what are some of the challenges that you might face like over the last few months, so on and so forth?
Okay, so I guess there's a couple of questions, but I'll just try to
Great.
explain
Right.
in as much as I think
Mm,
uh, I could possibly be explained. So I think first thing here is that how's investing like for me? I think it has been a rocky start, right? I think in the
right.
beginning, I wasn't really sure about the kind of framework that I need to have to actually succeed as a very good investor. Um, you can't imagine this, but I'll just bang walls around me, just trying to figure out what is a method that could work. And I think about a method that could work. It doesn't mean that
Mm,
it work for one time, two times, three times, but it should technically work for a long time to come.
right.
And then I think about the framework. I guess it really boils down back to learning and being curious and understanding that the world changes and it change accordingly as well.
Mm,
So the way I look at it as well, how's investing life for me right now is that in the past I used to be so tempted to read investment books, right?
right.
Frankly speaking, maybe I might not want to sound arrogant, but certain investment books are just carbon copies of each other, and the
Right.
things that you can learn from each investment books will actually diminish over time.
Right.
So today, I actually spend more of my time. I mean, I tried reading business books as well. I think that they are very
Definitely.
beneficial. But right now, I actually spend my time building my networks, right?
Mm,
My networks from London, from Hong Kong, from US. I think this is something that's really important because I might not have that time to read books anymore, but I want to spend time with people who have read many books and from their own experiences, I would like to learn from them. And I think that's an easier way to learn. But I also believe that since we are in Asia, I think a lot of times I might, back then in the past, I used to belittle myself. I say, hey, this is just I'm just Kelvin from Asia. What do I know? But I realized that there are a lot of interest in Asian countries that I could actually offer in terms of the cultures, in terms of the different
mm,
local contexts, which investors from overseas they would really really love to get some insights from. So I always believe in a two-way value creation. So for me, how I would like to succeed as an investor is first network. I think network is something that I'm spending a lot more time being very laser focused in building my network. And I think the second thing that I would like to say, it may sound a bit contradictory, but I think about optimizing my life, knowing that I cannot speak to many people and knowing that I cannot have too many ideas,
mm.
and but to really have that laser focus, right? Because um, today, I guess my portfolio is up quite quite good. I think this year,
Very good.
yeah.
Yeah.
But I think one of the important lessons that I've glimpsed from this year's performance is that, frankly speaking, I've done way lesser trades,
Mm,
but I've made way more money than any single year. And I would attribute that to really the focus to achieve that. So at the end of the day, I look at myself, first network, optimizing my life, have a constant learning. And again, like how would I succeed as a good investor, right? Because I understand one thing here, right? I have a small team, and that's myself, Herbert, Kelvin, So, and Jonathan. We analyze companies, but it's still a small team. And sometimes we still make our decisions quite independently. So
right.
my goal is very simple, right? To be a good investor, what does it mean, right? Just there are two ways to look at it, right? First, obviously, is the results, and another one is the qualities.
Right.
But I do think on a long-term basis, if you have a good process, it should show up in your results. So
Definitely.
my my goal is to maximize my returns, right, on my time and energy spent. So I want to ask myself today, every day, right? How can I make the best decisions to create incredible returns here today and not just basic returns like 20, 30%?
Mm,
So the things that I do every single day, it got to scale, efforts got to scale, returns got to scale, and it all starts with something that is more sustainable. So again, it all comes back to the selection of business models.
mm,
And I think most of the time, I was reading something on investment blog. It said that the reason why investors lose money,
mm.
sometimes it's not the problem of buying overvalued companies or
Right.
buying undervalued companies, but it's buying the wrong companies with the wrong business model. So business model is something really important, right? Get a business model that's really scalable, because there are many businesses that as they grow bigger, it's harder to scale. If you talk about oil and gas, talk about property, it's very, very hard.
Mm.
So if we ask ourselves, what are the businesses in this world that have true scalability, have true network effects, we'll realize that there are only very, very few companies that has that characteristics. So, and I also think that when it comes to choosing good businesses, right, um, I wanted to ask myself, what is the sustainability of the business model, right? Because for example, Alibaba, right, the reason why they have done so well in the past is because they were being, they're bullying merchant, right? They'll say,
Correct.
it's either you stay with me on my platform, or if I catch you being on other people's platform, then I'll block you away from my platform. So they grew their earnings by forcing merchants to take sides, right? To choose
Right.
sides. And I don't think that's a good way to build a business.
Mm.
But on the other hand, if you see a business like Tencent, right, that's quite open source, it allows everyone to participate as well. I think that's more sustainable. So at the end of the day, I also think that for me to be a very good investor, it is also the fact that I have to take a long time to decide on an idea because I want to be very good at this game, right? So I can share with you that this whole year, apart from selecting C Limited, I was also choosing between NLabs, I was choosing between
Right.
Roku, and I was debating on many ideas in my head every single day. So,
Like
but
which
sometimes my
company
head,
will have a deserve to be in your portfolio, so to speak, right?
yeah, exactly, right, exactly.
Yeah.
So,
Yeah. So since we are talking about like companies, their business models, scalability, perhaps you can share a bit more on this. Like perhaps just our audience definitely want to know what are some of the 2 or 3 top companies that perhaps if you don't mind sharing are in your portfolio right now, or that you think you have high degree of confidence or conviction, and why so? Like relative to and how do you judge them relative to their peers, right?
yeah, okay. But before that, let me just go back a little bit. I just want to talk about um, choosing businesses, right? I think we cannot be in a hurry to select businesses. And
Definitely.
sometimes when we have the business idea in our head, we got to let them sit for a while.
Mm.
And I also think that, if we decide to actually include a stock in our portfolio, it cannot be 1% and cannot be 2%. For the work that you do, you put 1%, 2% allocation. It really doesn't make sense.
Yeah.
And I think to myself that just a simple question, if this company that I would like to buy, I want to put in my portfolio, can it be at least 20% of my portfolio? If it can't, then I'm simply wasting my time because time is so precious. And for you to scale your returns, you really got to
Right. That's a good
laser
filtering
focus.
question. Right.
Yeah. So let's talk about the question that you asked. I think it's a very, very good question.
Mm.
At the end of the day, one of my best returns this year, I think it's not a secret. It's actually still limited.
Right.
And I actually wrote a blog post, not on C Limited, by the on the dynamics of marketplace, right? And I think that at the end of the day, I actually got this idea from Satya Nadella, which is the CEO of Microsoft,
Right.
and also from this guy called Peter Thiel. He says that the most valuable business for the next decade will be businesses who are enablers, right? That means you're a platform, you're a tech platform that helps other businesses to win
Right.
instead of businesses that aims to compete with one another. So it made me really think about what are some businesses that could really grow really, really well, right? By helping others, right? And I think businesses, it's just like society, the more you help others, the more you will grow. So in a very similar way, if you look at Microsoft Azure, right? It's just like a underlying infrastructure whereby all the SaaS companies, software companies are building and utilizing them. So if you think about all the SaaS company and you do not know which to invest, why don't you just invest in Azure? So
Right.
let's come back to the company that I'm talking about right now, which is C Limited, right? The way I look at it is very simple. I like to look things on a big approach here. So just have some figures in my head, right?
Right.
If Shopee right now,
Right.
they're pushing about 800 million of revenue.
Mm.
I think as of December 2019,
Right.
with a population size of 670 million, right?
Mm.
But if you look at Amazon, which has, I think, half the population of Southeast Asia, maybe America is about 380 million, 328 million, but Amazon had an e-commerce sale of 170.8 billion. So the way I look at it here is that um, C Limited is very well positioned to win the Southeast Asia consumer base.
Right.
And the reason for that, I mean, we talk about localization. We talk about Lazada being very mismanaged. I think the employees' morale is actually extremely low. And I think the fact that they have been acquired by Alibaba doesn't mean that they would automatically win the war in Southeast Asia, because I noticed there's a very big difference here, right? Because for you to win the e-commerce war, definitely going to spend money, right? And would Alibaba give unlimited funding to Lazada? I think that's an important question that we have to ask ourselves. But you look on the other hand, right? You look at C Group. C Group has this segment called Garena,
Mm-hmm.
a well-performing game called Free Fire. It's gushing out millions and millions of cash, and in the last quarter, they grew by more than 100%. So this Free Fire, Garena, and Shopee, they are together as one business group entity, right? So in terms of the financing support is there, it's 100%. Whereas for Lazada and Alibaba, it's more like an acquisition.
Right.
They are not created. So in a way, can I say this, right? They are not created from the same mother. These two different mothers, and they are now working together. Whereas you look at C Group, they are from the same mother, and they are all committed.
Right. So there are more synergy, so to speak.
Correct. And
Right.
the fact that if you look at Southeast Asia, recently I think Google pushed out a report on the state of the e-commerce in
Right.
Southeast Asia. A lot of businesses today are seeking for profitability, right?
Right.
Look at Shopee's biggest market, Indonesia, right now.
Mm.
The biggest competitors are Tokopedia and Bukalapak, right?
Right.
And those companies, they have been raising a lot of money from a lot of investors, and investors now demand them to be profitable.
Mm.
So there will be a point of time that they might pull back on their sales and marketing just because they want to be profitable.
Right.
But for C, we always have this idea that if a business is loss making, that means this is a lousy business. But you look on the underlying economics basis, right? It's just like a software business. You spend a lot of money to kind of like acquire
Right.
customers upfront, but on the lifetime value basis, it's actually extremely lucrative.
Right.
And I think for C to execute on the opportunity and to be the face of e-commerce, I think the chances are actually very high.
Right.
And I think there are a lot of indicators already, right? If you look at Google Trends are already showing that Shopee is taking a very large
Market share.
market share, and also a very large lead over the competitors.
Right.
Lazada, Tokopedia, Bukalapak, they are all far behind. So this very important thing that I'm mentioning is something that will drive the long PCs. I mean, there will be speed bumps, right? The growth
Right,
rate is not
definitely.
constant, but the most ultimate thesis that I have here is this, right? Amazon in US, population size, half of Southeast Asia, they have 170.8 billion of sales, right? Billion in sales with a B.
Right.
But for Shopee, 800 million in sales, double the population size. Why is this happening? Because I was just reading an article here, right? Amazon said that they were very, very lucky to be able to start the business at the right timing. Is where the internet was really taking off, right?
Right.
It was at a point where there were ready logistics that was available. Right. That's why they could ride the trend and benefit from it. But for Shopee today, right, internet penetration rate have actually increased tremendously. And also today, if you look at phones, right, it can be as cheap as $100. So someone from the rural area could have access to the phones, could buy a phone for $100 and have access to the same services as one person that's living in Jakarta, right?
Right.
So, but what is not happening right now is the investments in logistics, which makes things a little bit harder. But certainly, I believe if certain economies like Philippines and Indonesia, they would like to grow, they should make commerce easier, right? And there are a lot of investment in the logistics side already. But once the logistics side starts to mature, I think Shopee will be well positioned to take the lead forward. And again, Shopee 800 million in sales versus Amazon 170 billion in sales. I think the runway is very huge. And again, if you look at the e-commerce sale as percentage of total retail in Southeast Asia, it's 5% of total retail.
Right.
In US, it's about 20% already. But 20% is still very low. And last quarter, Amazon reported 40% sales, 40% growth in sales, even at that level of saturation, right? So what does it mean for e-commerce runway? It's extremely, extremely long,
So
right?
right. So since like there's quite a big runway for Shopee and C Limited, having said that, right, what do you think are some, because you know the company pretty well, what are some of the challenges that they might face over the next 3 to 5 years in terms of them, along this runway, in terms of them scaling up? Yeah.
I would say one thing here.
Right.
The management team is good. I think the management team is very committed. I think they have a very good culture. But the only problem one of the many problems that I think that they will face is the lack of people, right?
Lack of people.
At the end of the day, in the past, if you talk about 2009, most companies that are hiring the top engineers are banks. And quite frankly, banks are their only choices. But today, if you're a smart, hardworking engineer, programmer, you have many, many choices, right? You
Definitely.
can work for Salesforce, Google, anywhere else. And C is always trying to fight for good talents.
Right.
And in Singapore, all the best talents goes to the government agencies, right? With
Okay.
scholarship.
Right.
That's going to be very hard. So C actually do have an internal list of who is getting off their scholarship, the bond, and they want to hire them. So
Right.
I really, really think the problem that C has right now is really the lack of, I wouldn't say lack of talented people, but can they have more good people on their team, right? There's always a struggle, especially if you're a tech company as well. At the end of the day, the ambition of the company, I feel, is tied to very strongly to the ambition of the people. So what does C Limited needs a lot is mini generals, mini CEOs for different business units. And I think remunerating them well enough, ensuring that the culture is well intact, things that is what I really believe in. But as for the business model, I do feel that as long as the flywheel effects and network effects continue to take place, and right now I do believe that Shopee is widening the gap between its competitors. I think it's really hard to stop something that has such strong momentum, unless I think the team screws up really badly, which I think is quite unlikely. Yeah.
Right. So in terms of like C Limited, I think it went up in terms of this year, it went up quite a bit, right? And because of market cap and the business was just really good. So for new investors who, just like let's say first time watching this and they went, hey, yeah, actually they agree with you, it's good business and they do their homework, build up their conviction. Right now at current prices, do you think, C Limited is a fair value, overvalue, undervalue? If investors who have not yet bought C Limited, do you think is a good time to buy? Do you want to talk about this?
Okay, I feel I'm gonna be put in my spot, but let me just try to explain things
Right.
best of my ability. But I'd like to draw an analogy over
Definitely.
here, right? You and I, we both invest in software companies, and
Right.
sometimes it does seem that because we have been talking about software companies for a long time, we feel that software is already well penetrated in the economy today, right? Just
Definitely.
because something that you've been talking a lot about, you need to assume that it's been well penetrated in different sectors, different countries. But the thing here is this, right? Satya Nadella has also said that software spending is less than 5% of the GDP. And we had software around for almost 8-9 years, but yet it's just 5% of the GDP.
Right.
And he believes in the next few years, it's going to double to 10%. And again, it's just 10%. And I think in COVID-19, what is the blessing that we have seen is digital transformation, and that have actually lowered down our costs, right? For my business, when we do Zoom, it allowed extreme scalability. And I think likewise for you. So how does it apply back to C Limited? We have seen that C Limited have gone up 4 years ago, $12 per share. Now I believe it's 164% per share. It seems really, really high right now.
Yeah.
But I would really consider this, right? I would urge everyone to really look at the runway ahead and really think about it. If you ask me, I think e-commerce is something that's going to be really, really huge, despite the fact that we have been so used to e-commerce. But what we have experienced is just, maybe if you're listening from Singapore, you feel that Singapore is well developed, e-commerce is just everywhere. But you go to the rural areas in Indonesia, in Philippines, in Vietnam, I do think that there's a lot of growth moving forward. We have rising demographics, we have rising purchasing power. We have people who desire to be merchants themselves as well. So I do really think that if you will ask me, C Limited right now, is it a good price? I just want to state that price, if I'm not wrong, right now is $170 plus.
Right. So today is a November 19, right?
Yeah,
Right.
thanks for it. Yeah. So 19 November, yes.
19 November 2030.
Yeah, I do think that the price is still not considered expensive for a company like that. But even if it's fair value,
Right.
even if it's fair value, is this still a good company? I says yes, because I ask myself today, every single day, I'm looking at companies, right? I mean, every day you are looking at companies as well.
Mhm.
But what are some amazing companies that we see every single day, year, or even in a decade? C Limited is a company that I don't see it every single year to have such an idea, such a fantastic and exceptional idea. I think you look at a CEO Forrest Lee, I think he's underrated. I think not many people understand him
Mm.
because he doesn't like to do interviews. He rather put in the hard work. But as I understood him, I understood his character, the way he is running C today. I think he's a phenomenal operator. And so definitely I would say that C Limited to be a multi-bagger, meaning 2 times, 3 times over the next 5, 6 years, it's not hard to imagine that will happen.
Definitely. Yeah, definitely. I think it's not hard for one to imagine the runway and the path to the future. Lah. So we talk quite a bit on C Limited, and perhaps it's just my own take. Another company that I think have the same kind of runway, right, will be Tesla. All right, I think it's quite hot recently. Everyone's talking about Tesla. Perhaps Kelvin, you can share, what are your own thoughts on Tesla? Is it in your portfolio? Yes or no, or why not? Right? Or what's your, or perhaps that might be too sensitive. We can share like what's your thoughts on Tesla, thoughts on their runway, and what are some of the challenges that they might face?
All right, that's a very good question, and just like to congratulate you from doing so well on Tesla. I think Tesla is an incredible company. Um, so previously we met before,
Right.
so we talked a little bit about Tesla. I think it's
Just
going to
share.
think really hard what I'm going to say. I think I just want to say that I have no view on Tesla. I stand the same way. I have no view on Tesla. But what I can say for Elon Musk, right? I
Right.
read his book. I think it's incredible. There are many periods of his life where he could go bankrupt. Tesla could go bankrupt.
Yeah.
SpaceX could go bankrupt. But he have such an incredible ability to bounce back from setbacks. And I think the most important thing on how I would evaluate CEOs is whether they have too much of a self-belief.
Right.
Because when you want to change the world, you need to see how is value created in this world today. Value is not created by doing the same thing like everyone else. Then you're going to be a carbon copy. That's not value. There's no value created. Right. But value is created when you decide to change something new and you create a new industry for yourself,
New
right?
frontier, right.
Frontier, exactly, right? So for that to happen, you must have too much of self-belief, because as you get out there to run your business, there's going to be critics, there's going to be people who are going to push you down, there's going to be multitude of problems, and it seems like everything is impossible. But Elon Musk have, went beyond that, right? He didn't, those little things didn't matter to him. And I think most of the important thing that we need to understand about Elon Musk is that when he sold his first business with Peter Thiel, I think he netted a lot of money, but every single dollar that he had, he reinvested in SpaceX, he reinvested in Tesla, everything that he could possibly finance those two companies, he did that. And so the way I look at it is that Elon Musk is a guy, it's like an ant that will never die. It's like a cockroach that you could never kill. And a guy like him is extremely dangerous because he could be really, really very good at excelling. Because when impossible doesn't exist in his mind, I can tell you, he will bring us to the moon one day. He'll bring us to the Mars one day. And I always feel that today, if you look at those very successful businesses today, do we think that the reason why they are successful because when the CEOs, founders created the business because they wanted to make money? If all that you and I wanted to do was to make money, there's many other ways that could make more money rather than running our own investing community.
Right.
So why am I talking about it? Is because when you look at Elon Musk, if all he cared was to make money, he wouldn't be running these two businesses. But for him, he has a vision. He's trying to make the impossible happen, and he's creating an altogether new industries. And for that, it's going to be exceedingly difficult. But the good thing is this: once you are the first mover advantage and you're doing something that's incredibly difficult, no other player could come close to you, right? Even Google started way more. I think similar time at Tesla. But look at Tesla, the amount of data they have, I think it's difficult to compete with Tesla. But if I look at Tesla as a whole, in terms of valuation, I think there's different moving parts for the business. You talk about robo-taxi, talk about, there's a lot of things inside.
Definitely.
It's really difficult for me to break it down, which is why I don't have a view on that. But you asked me about Elon Musk. I think Elon Musk is a guy that if he wanted to run for president any day, he could win the election. Honestly speaking, a guy like him is so powerful, which is why
Don't bet against him.
Tesla has a lot of fanboys, right? And rightfully so. So I think I'll just leave it as that. I'm a fanboy too for Elon Musk.
All right. Okay. So let's move on. So perhaps we can talk a bit about other kind of asset classes besides just investing in stock market or equities, right? Like definitely recently, like Bitcoin prices is starting to move back up. And so, what's your thoughts on diversifying perhaps into other asset classes like properties, gold, silver, and also cryptocurrency and Bitcoins?
That's a question that my mom would constantly ask me. Hey Kelvin, do you want to buy a house soon? Kind of thing. I had a going purchasing a business, a private business. I didn't become the major shareholder. I bought a small portion of the business.
Okay.
Unfortunately, I think the business did not do quite well. But it's okay. It's a loss that I could take. Unwillingly. Yes, unwillingly. But when I look at what you have mentioned about properties, about gold, about Bitcoin, I do believe that those assets are phenomenal assets in certain cases, right? Bitcoin has done really, really well. And I draw a lot of my inspiration and the way how I think, my mentality, they will form from the business leaders that I study, that I read. They will form from the people that I meet, as well as successful people that I read. So I do remember that I was meeting this guy called Sherman Jen. He runs a business called China Maple Leaf. I don't own the stock. So I just say in Chinese first. He say, 在一个人生当中，一个人做一个好事做得漂亮就足够了。
Wow.
So what it means is that in your life, be very focused at one thing and do it so well that it makes you a very outstanding person, and that is all that you need to be satisfied in your life. So I don't rule out that one day I'll buy properties. I don't rule out that one day I'll buy Bitcoin. But where I would like to see huge success, and I think where I will still derive the most gains, is doing something that I've always been doing and doing it really, really well. So if you ask me, will Bitcoin move up by 10 to 20% in certain period of times? That is an answer that I can't give to you or anyone else. But if you ask me certain stocks, I have absolutely huge belief. And I think that has also been validated by the results that I have consistently. So I rather work with something that's very consistent, and I don't want to be distracted. And I also look at it the very same way here today. Microsoft, you look at Steve Jobs. I mean, let's just talk about Microsoft, right? I think Bill Gates grew Microsoft to such a scale maybe at a very young age.
Right.
And he could be distracted by a lot of things, but yet he chose to spend all his time focusing on building Microsoft, and that's how Microsoft become great. So I think a lot of things that we want to do in life to become outstanding, to be great, it requires a lot of focus, just like a rock, right? Under immense pressure, but also a lot of focus, it becomes a diamond. So I have certain views about Bitcoin, gold, properties, but my preference for my wealth creation vehicle has always been stock. And I realized over time, because I think that it's always important to be humble, to keep learning. So as a result, seem like making money off investing in good companies is a lot easier than properties, gold, and Bitcoin for me.
So if I hear it correctly, right, that means like back to what you said earlier, being laser focused in what you're really good at in a playing field that you have certain strengths, and this will amplify your results. So you want to play like concentrated in that area, right?
Yeah, absolutely.
So perhaps some general questions, right? Like here, like audience might have this sense, if I'm in your shoes right now, knowing what you know right now, that we all rosy. But if some of them might not be at where you are right now. They might have a smaller portfolio, might not have the best knowledge. So if I were to ask, right, if you were to, go back in time to 8 years ago, with a much smaller portfolio of, let's say, 10K, right? How, and then you're doing it all over again, how will you do it? Like, what are some of the actionable steps you will take? What are some of the immediate steps? And how do you map up your next 5 moves, so and so forth?
Okay. But is it
So this is,
knowledge or no knowledge yet?
okay, let's just say with no knowledge. So you go back in time 10 years, go in time machine 10 years ago, but then you do not have the knowledge that you have right now. But like, hey, like investing is for you, and how will you, what kind of steps will you do to gain the knowledge that you have right now? So in another way, how can you accelerate your learning curve faster also?
Sure. I think that's a very good one. I think that would be extremely helpful because this is exactly the kind of advice that I wish I to myself when I first started.
Right.
It's not something that's mind blowing, but I think something that's very crucial. But yet, most of us do not practice a lot, and that has hindered our success in our life. I think the fact that asking for help is something not very common in Singapore because maybe we just think that asking for help is an embarrassment. Asking for
Right.
help is puts us in a vulnerable position.
Mm.
But I always believe that back to the days where humans were hunting together, back to the days where even before the Stone Age, right? I believe that humans, we're supposed to help each other to succeed, right? We're supposed to help each other to do well. So one of the advice that I would give myself or give anyone who just started out investing is don't be afraid of looking stupid, looking vulnerable. The more you feel like doing it, the more you should do it. And when you feel stupid, that's probably where you're learning. And when you're feeling vulnerable, that's where you feel you're learning. So don't associate feeling stupid and vulnerable meaning that you are not progressing. You should look at these two things as a signs that you are growing. Like for example, people who come for our masterclass, right? They say that, oh, Kelvin, I feel so stretched today. I feel so overwhelmed today. But that's exactly how it's supposed to be.
Right.
So again, I would just go back and let people know today, find someone that you know has credible results. Find someone that you admire, not just for his results, but also his values, right? I think both things come together, and never be afraid to take chances. I think taking chances is really important. Like when I was pretty young, I was on this forum called the valuebuddies.com. I noticed certain people wrote things in such an elegant way, such a way that I could learn a lot.
Right.
And I asked myself today, if I would pay this guy and I invite this guy out for lunch, would that be good, right? I would say that's going to be good because I'm going to learn from his 5 years, 6 years of experience. Then I would think one voice would appear in my head like, come on, he will not accept it, right?
Yeah.
Who are you to invite him? So how I rationalize my decision in my life right now, right, even today, is asking myself what's the upside and what's the downside, right?
Right.
There's no absolute downside, like asking someone out for dinner, asking someone who's experienced
Right.
to have a conversation. There's no downside. When there's virtually no downside to anything in your life or any decision, you should just go and do it already. Like just like how I've been reaching out to a lot of people in the United States as well. There's no downside of asking.
Right.
So one thing I would say is really getting out there and vocalizing yourself, right? Because when you want help to come to you, you need to vocalize. So why don't on your Facebook, today we are such a social world as well, right? Tell people that you want to be a good investor, right? And ask people for help, ask people to point you to resources here and there, right? And just figure it out your way. But I think how I suffered in the earlier days was that I did not know what I was doing. I was just running around doing a lot of things. And when I was fearful, when I make my investing decisions, I made it myself. And I did not want to tell people. But today, as I make investment decisions, I would actually ask 2, 3, 4 people who are well trusted people. And I say, I'm going to buy this stock at this price. What do you think of it? When you have 3 or 4, 5 people who are good investors who actually sort of tell you, hey, I think you're on the right track. I think this is good. Do you realize that how many mistakes could be avoided just by going out there? But in the Singapore term, we can say, oh, feel very paiseh, that kind of thing. I don't think that's true. I think in our life, first we've got to work really smart, vocalize what you really want to do, and actually try to really learn from people and be out there, be as curious and ask as many questions as possible. I think it's really very simple steps, but the question is that why is no one doing that? Because they're just feeling paiseh and embarrassed. So don't be paiseh or don't be
Right.
embarrassed.
Awesome. Very, really good advice, man. So this for perhaps more for beginners who can get started or looking to take the next few steps. If there's like more intermediate or advanced investors who are achieving perhaps like decent results, maybe quite consistently also, what advice will you give them to take the next step? Like what separates the really great investors like yourself from the like just the decent good investors? Like what's the that top difference?
Okay, thanks for flattering me, but I think I would still think that I would like to grow every single day.
Definitely.
Yeah. Okay. I think that's a very good one. To really think about as well. But the first thought that I came to my head as well, because as I was speaking to a lot of my friends, my colleague
Mm,
members, or sometimes even speaking to you as well, I think most people when they buy stocks, they don't really have the conviction to take concentrated positions.
concentrated.
Maybe because of lack of conviction,
Right.
lack of homework. Usually those are the two cases, right?
Right.
So at the end of the day, to have outperformance, to move the needle in your portfolio, it's always coming down to concentration and always setting a higher bar for portfolio inclusion. If you look at your first 10, I mean, if you are holding 10 stocks right
Right.
now, and you look at the allocation, you realize that there are some stocks that you don't have conviction in. Then why is the stock in your portfolio in the first place? Is it just because you want to feel good that you own this stock? But there's
Right.
nothing emotional about investing. It's all comes down to facts. It all comes down to return. So the way I look at it as well
Mm,
is that any businesses that do not grow by more than 30%, I would actually not look at it, because
okay.
you see there's actually a very simple thinking behind it, right? We look at the rule of 70, right? Rule of 70 divided by 30, 30% is as in like 30% returns. That means to double your money you need about 2.4 years. But then if you take the rule of 70 divided by 40% returns, you double your money in a much faster time frame.
Right.
So I think trying to raise the returns that you have every single year is extremely important, and that can only happen when you have concentration and you hold. I mean, concentration means you hold lesser company, and the company that you really hold have to be best in class.
Mm,
Second class, third class, let's not talk about it because it's a waste of time,
right.
right? You've got to be really, really focused. So I also like to mention another thing here. This is going to be a bit new content, which I've not talked a little bit about before. I think a lot of investors seem to be really, really comfortable holding on to very well-known names like Facebook, like P&G, Johnson and Johnson,
Right.
like Netflix. I think Netflix is an incredible company. Companies that have been long for a long time. But I think that these are companies that most people deem to be safe, but actually it's very risky because
Mm,
they have already grown to a certain huge size, and for them to have that outperformance, I think it's going to be really hard. So there are some companies you hold that may be very safe, but at the end of the day, it will become a returns drag. It will start dragging on your returns.
right.
And there was this video that I watched recently between Peter Thiel and one of the co-founders of Google. So Google was being criticized for holding too much cash.
Right.
Google was criticizing for having too high of a margin.
Mm,
That's really funny, right? Because usually high margins is
right.
what all investors think is good. And Peter Thiel said that all companies should be operating at near break even,
Mm,
because if you look at Amazon, um, every single time where they knew that they were going to break even, they would, or they knew that they're going to make the high margins, they'll take their profits and reinvest in the R&D to drive future businesses, to accelerate to future agency verticals, to create new business segments. So the day where you start to see that a business starts to report very, very high margins, it also could mean the day whereby they realize that they could not invest in anywhere else, right? So if you look at Facebook,
right.
having so much cash, are they really utilizing the cash well enough, or are they running out of ideas, right? So you say that companies that are loss making and then they are trying to raise money and
Mm,
they raise money for very high returns. These are the companies that you should be looking at, and you should be very comfortable because they are doing exactly what a company should be doing, is to get the scale, then monetize later. Whereas for some businesses, they want to monetize now, and they realize that they couldn't get a scale. And I think in today's era where interest rates are so low, if a business is trying to make excuses for not scaling because of lack of capital, I think that's really a very incompetent CEO, right? So
Right.
really, really, I mean, sorry for the run around, but let's come back to your question. Again, high bar for portfolio inclusion. Choosing companies that's growing at least more than 30%.
30%.
And really, I think having concentration is really, really important. So instead of like holding 8, 9 companies, but really just drill down on 1 or 2 companies, understand them deeply, have a very strong conviction. I don't see any reason why you would not do well in that manner. But again, I think concentration is not something that most people are comfortable with. You must be really, really confident, right? In
Yeah.
the company.
So if I hear correctly, right, like filter out companies that at least more than 30% growth, being concentrated if you feel comfortable. So perhaps just to for our sake of our audience to expand on this a bit deeper, I think it's a really interesting topic. Like for maybe investors who do not have that high degree of conviction or experience yet. For example, if I use the analogy of, hey, if I just first learn how to ride a bicycle, I might want to start riding with 4 wheels. And someone who is a professional biker say, hey, you need to cycle really fast to get to where you are, because you can compound faster and so on. So where do you draw the, for beginners or people who are somewhere in between, where do you draw a line? For example, is it comfortable? Is it okay for them to have perhaps a bit more safer companies like what you mentioned, like Google, Facebook, so on and so forth? Or how would you approach this question?
Okay, that's a very tricky question. I'm inclined to say that we'll never know when we are ready, and I'm never inclined. I think we will never know whether we are comfortable. And maybe I will share this story first, then maybe it will have some
Definitely. Sure.
context. There's one company that I invested in when I was really, really young. It's an oil and gas company. Not something I would invest today, but it has good contracts. It has a good
Right.
order book. It's done really, really well.
Right.
I put in an order because my portfolio was small back then when I first started out. That's the first year of investing. I invested 50% of my portfolio, right? Small amount, which is why it was 50%. I put in an order, right? And it didn't go through because the share price started rising in the morning.
Right.
It didn't go through. I said, I really love this company. Despite it going up more than 6%, I still think it's a great company. I put in another order. In the afternoon, it went through. So I got the 50%. I was really happy.
Right.
Then in the evening, the share price came coming down. And guess what, Remy? I forgot to cancel my order.
Oh.
So first order 50%, second order 50%. And I did not have enough money to kind of fulfill 2 contracts.
Right.
So all my other positions just to fulfill this
Wow.
contract. So one company, 100% of my portfolio. Was I feeling worried? Yes, I was feeling worried. But when I sat back and I said I did the homework, I spoke to the CEO, I did a lot of work, I spoke to a lot of people.
Right.
And seemed like the probability of it not doing well is very, very low. And actually, the company eventually went up 180%. So when I was first year of investing, I would say that was a lucky one. I made a lot of money. But again, I think for the listeners, they could say, hey, Kelvin, you're just pretty lucky. I don't doubt that. I think I was pretty lucky. In fact, very lucky.
The probabilities play out in your favor. Right.
Correct. But what I wanted to say is this, right? I never knew I was comfortable with 100% in one stock back then until it happened by accident. So it means that for any one of us over here, when we want to be concentrated, right? You will never know whether you're comfortable, but you should at least give yourself the opportunity to be uncomfortable. Because how can you do well when you're always trying to seek for comfort?
Right.
Investors who are always seeking for comfort, they will never do well. It's always that intellectual tension that you have in your head to say, I'm never satisfied with where I am. I'm never satisfied with the status quo. How can I do a bit better? And how can I take risks that I can take, right? Because I don't want to like look back 5, 6 years ago and say, oh, I should have been a concentrated investor. I want to give myself the opportunity to learn. And if you're starting out first year, second year, do as much as you can, learn as much as you can, so that you know your style and you know what you're comfortable with and what you're not comfortable with. But the scariest thing is that when you don't even want to try, right?
Right. Definitely.
Yeah. So I guess that's how I look at it.
So how will you, on a practical sense, right? How will you recommend investors looking at this, digesting this information, and okay, I need to stretch my comfort level in terms of concentration. How will you advise them to go about doing it? Is there any practical tips that you can share?
I would say that another analogy, we were all of us were like, you know, maybe you and I are a bit experienced in what we do in investing. But most people, they are like fleas in a glass jar. They're like jumping down, up and down, right? So the fleas could jump very high.
Right.
Put it in a glass jar, you put a lid for a few hours, for a few days, take out the lid, they can't jump out of it already.
Mm.
So I think what I really wanted to say over here is any practical things is that you got to learn from people who are already doing it. Then you will ask yourself, wait a minute, if Warren Buffett could have 40 or 50% of his portfolio in Apple, and Kelvin could have like 40, 50% of in C. I mean, I don't know if you have 50% in Tesla. But let's say just it is like that. And you look at those people, right, and just start to wonder to yourself, like, what is the conviction that they have that allowed them to do it? And why are they so comfortable with that, right? So all of us need role models in our lives. Our relationship, in our fitness, role models. In our investing, we also need a role model, right? There are people who look to you, look to me as role models, and I think we have to do a good job to really educate them. So really, I think the practical step is to find someone that's already doing it,
Right.
and seeing them succeed and telling yourself that, hey, this is nothing impossible, this is actually possible. And
Right.
then you'll be no longer the flea in the glass jar, but in fact, you are actually jumping out already because you
Right.
are actually interacting with the fleas that were out of the jar already. So never stick yourself in that jar. Always try to get out there, right?
Right.
And I think that's one thing I've learned a lot, mixing with people from overseas as well, not just Singaporeans, but overseas. And that's how I changed my mindset over time.
Right. That's really awesome advice. So I think over the last, almost 1 hour, like I think we covered really awesome stuff. It was a really interesting discussion hearing you talk about, your investing frameworks and your thought process. So, as we wrap up this interview and this discussion, right, is there anything, final thoughts or advice you could like to share or give to any of the audience right now before we wrap this up?
Yeah. I think in our life, my life at least, I always thought about the mistakes that I had in my life. And I think sometimes when we think of a potential thing that could be a mistake, then we will stop. We will not want to even try. So I made a list of my mistakes. I think will be very relevant. I think there'll be a lesson behind it. I regretted not investing earlier. I regretted not reaching out to Rayming earlier. I regretted not networking harder. I regretted not investing in overseas, US, earlier. I was always investing in Singapore in the first year. So I asked myself this thing, right? How can I actually avoid more mistakes? Honestly, I can't. But every single day in my life, I just ask myself, anything that I want to do, let's just do it. If there's nothing that's stopping me, let's just do it, right? I don't think it's just pertaining to investing, but my life, whole life.
Right.
So if you look at businesses, you want to buy businesses that are scalable businesses, right? Not just linear growth, but exponential curve. And you ask yourself today, what is the trajectory of my life? Is it just a linear curve or is it exponential curve? So you have to be the exponential curve yourself. And you can only be exponential curve when you're willing to try, willing to learn, and willing to get out there, right? Now, the thing is, get out there, mix with people, role models, right? And you'll make a life a lot easier. So I think just to keep my advice really simple, is that my mistakes are the things that I have not tried early on. I wish I had done it early on.
Right.
So you can only avoid more mistakes by doing more things that you fear and get out of the comfort zone, and you'll start to realize you have more better quality of life, you have higher satisfaction and lesser regrets, not just in your portfolio but relationship and in life in a very broad sense.
Awesome, man. Some really, really good advice there. So, yeah, as we wrap up this interview, really thank Kelvin for your time. you to take out this project to share a bit more. So if any of the audience would like to find out a bit more about you, what you do, perhaps on your investing programs also, how can they reach out to you or on social media, etc.?
Okay, so I'm pretty active on Instagram. You
Right.
see that sometimes I like to post what I ate. That's Kelvestor, Kelvestor. I also have one small Telegram channel that I share with Jonathan. So the link is t.me/growth investors.
Right.
Always
So I'll put it
happy
in
to
the
know
link
more
below.
people. Yeah, always happy to know more people. And Raymond, thank you so much for this opportunity. I really appreciate it a lot.
All right. All right. So thank you guys. Hey, audience, any questions, feel free to add in the comment. All right. Or me or Kelvin, we will try to answer if possible. All right. Thank you guys for your time. All right. See you guys. See you next time.
Okay, bye bye.